I'm Sarah Borkson-Keeter with REITs.com. I'm here for Quick Study, a monthly review of REIT market developments. I'm joined today by Brad Case, REITs Senior Vice President for Research and Industry Information. Welcome, Brad.
Thanks.
So we saw the REIT market come back a little bit in March. What were some of the factors behind that trend?
Yeah, if you look at the month of March as a whole, REITs were actually down during the month of March. That was really mainly the first full week of March, roughly March 3rd to 10th. That was a bad week. The rest of the month, REITs spent recovering from that, but by the end of the month, they hadn't quite reached where they were at the beginning of the month. It was kind of a blah month in the markets as a whole. What you saw was that the S&P 500 was positive just barely. As I said, REITs were negative. It was really a month in which value stocks underperformed, whereas growth stocks were more positive. And although REITs are very different from other value stocks in the stock market, because the returns for REITs are driven by developments in the real estate market, whereas the returns of the rest of the stock market are driven mainly by developments in the business cycle. REITs are still value-oriented companies, and therefore when investors would prefer growth companies, that's not going to work to REITs' advantage. So in the month of March, it wasn't a month of very big movements, but certainly you saw that the part of the market that REITs are part of was the weaker performing part of the market during March.
And were all property sectors heading in the same direction?
No, you really saw some real differences among property sectors during March. Some of the weakest performers were retail REITs, as well as office REITs and self-storage REITs. When you think about retail REITs, I mean, there was some concern, especially early in the month, about the returns for retail properties going forward. I don't know, those concerns don't explain what we saw for office REITs or self-storage REITs. On the other side, we saw some very good performances among infrastructure REITs, among data center REITs, and so investors were really, I think, looking at the macroeconomic situation and trying to guess who was going to come off looking better. One thing that's really I think worth pointing out is how well mortgage REITs did during the month of March, especially those REITs that focus on mortgages, on home mortgages. But really they were positive by several percentage points, beat the broad market handily. That part of the market, if you look at REITs in general, they still seem to be undervalued, really in all parts of the REIT market. But certainly mortgage REITs, REIT valuation signals seem to be even more bullish. Where, as I said, the entire REIT market seems to have signals that are bullish, those being their spread to treasuries, their spread to high-yield corporate bonds. In the equity space, equity REIT space, you can look at the stock price relative to net asset value, and REITs seem to be selling at a discount. So all REITs seem to be in sort of in undervalued territory, but I think that's been especially true for mortgage REITs, and maybe investors have started to pick up on that and have decided that that they need to start taking advantage of those valuation signals.
Great. Well, thanks very much, Brad.
It's a pleasure.
And for more news and analysis on all things REIT, be sure to visit REIT.com.